Welcome traders to this short 5-minute video on the Forex market. Today's webinar will review the pound momentum, for instance, here at Admiral Markets, but also the euro dollar, dollar yen, AUDUSD as always. First of all, though, the disclaimer explaining that this material is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding info on the charting, conditions, and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, the risk involved in trading foreign exchange and global financial markets is considered very high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational and informational purposes only. Please pause the video to read the entire disclaimer, and we do thank you for your attention. So before we take a look at the Forex market, just wanted to give you a heads up of the remaining webinars this week. We have, for instance, on Wednesday, Forex Strategy, which is intraday trading. We have Expert Advice, the truth behind indicators. And on Thursday, we have Fibonacci Trading, plus how to trade with Android and iOS. We also have the weeks later strategies for Keltner and our personal stories. So I hope to see you in one or all of these webinars. Now let's start with the euro dollar here. This is the daily chart, and we can see a bit of a rounding here at the moment. A couple of down days last week, 1, 2, 3, 4. A bit of a struggle in the sideways zone the last couple of days. But for instance, yesterday having a bullish day and a bullish close near the high. So this is showing me a bit of a rounding here and a maybe potential double bottom. All that price action and struggle is also occurring close to that 135 and this blue bottom as well. So I think the downside is having some problems here, and maybe the bulls can take back control, but that's something, of course, that remains to be seen. The bears would have to break probably below that 134.75, at least it's 135 for a better shot, or see price go back up to the 136.75 resistance area for some potential, I would say, or otherwise the bulls could seek maybe some upside bounce if they get closer to support again, and there could be momentum on the rise to challenge that 136.70, and if not, even to break above it to challenge the bigger top here at 140. Intermediate levels of resistance could be, for instance, the 138 as well, which is the 61.8 fib. Alright, let's move over to the cable, the pound dollar 4-hour chart here, and we talked about the momentum. Why? Because of this breakout to the upside. Very powerful, but price indeed stopping at roughly 170. Of course, that is a psychological number. And we're getting a bit of consolidation here on this hourly chart, looking very much like a triangle like this, for instance. So that could be consolidation pattern, something that I'm keeping an eye on, because if we get a break to the upside, it could spell some breakout potential, although the 170 and the bigger weekly top at 170.40, 170.50 is close by, so the space is a bit tight. The downside break could mean the failure for price indeed to follow through to the upside and a break below these bottoms. We might see some downside back to support at 169, 168.60ish roughly at this level. We could put a fib on, for instance, here, and we do want to be careful of any of these levels, or maybe even a fib from here actually. If we zoom out a bit more, you can see that wide at 169, for instance, is an important level. And as well the 168.50 because of the 61.8 fib and top on the left here. So those are potentials. Be careful to both sides, I would say. It's a bit difficult to minefield at the moment because it is a strong momentum. Therefore, upside is preferred, but because of the levels that we are at, strong weekly resistances here on the left from the past, right there. It is something to be cautious of. The downside is dangerous in a way because of this upside momentum. So I'm interested in this pair, just need to be a bit more cautious. Next on the list is the AUDUSD. This one is a bit of a strange situation here in the sense that we had a great uptrend channel. Price broke through the 61.8 resistance fib, but then started to consolidate, in fact, and we've been going sideways between these red lines and blue lines now for quite a while. It's dating back to actually about end of March. So we've been bouncing up and down. We recently have approached the top again and are now moving downwards. So it looks like we have a range trade environment at the moment where price is bouncing between these two levels. So maybe the next target again is 92. If we then zoom into to the 4-hour chart, we can see though that we are having a bit of uptrend channel. So it's not an easy one to trade. Maybe waiting for a daily close below these lows and then a hook back and retracement of that bearish daily candle, if it does close bearish today, for some downside back to the bottom of the range is something that I'm thinking of. So let's see. Of course, as always, take caution in any of these ideas. These are just things that I have in my mind. We'll have to see if they get executed or not. Last but not least, the dollar yen. We had a pretty good momentum here, but we're still actually correcting that to the downside with slow moves. Stop at the 23.6, stop at the 50 fib, stop at the 61.8, now stopping at the 88.6. This could be maybe the bouncing spot if we move the fib a bit lower. Probably that's the fib 2, yeah, 61.8. So that could be the bouncing spot, I would say, for a decent breakout potential to the upside back to about 103.30, 104 areas, I would say, is what I'm looking for. It's not a trending environment here on the dollar yen, but that could be a breakout trade considering this momentum that is worth considering. That wraps it up for today. Thank you so much for joining and hope to see you in one of our webinars. Cheers.